Why are you positive on European equities?
Well, I think from a contrarian perspective, it could be appealing actually at the moment to add to Eurozone equities. When we look at positioning, both buy-side and sell-side surveys are still suggesting that Eurozone equities are pretty unloved at this stage. When I look at the recent drop of inflation expectations, so five-year hitting 1.2%, markets are apparently pricing a Japanification of the Eurozone. But actually, from my perspective, a lot of negativity is already priced in valuations, and I could imagine that this is an appealing asset class for investors with a bit more contrarian, from a bit more contrarian perspective. Let's also not forget that we find ourselves in a lower for longer yield environment, and what Eurozone equities offer are a quite juicy dividend yield at the moment of up to 5%. And this dividend yield is even more attractive actually for US investors who then hedge back their exposure in US dollars.
Right, and I suppose if you look on a comparative basis as well to where the bond yield is trading, you've been talking about lower for longer, Ann-Katrin, that does make sense to a certain extent as well. Yeah. But in terms of the external factors on Europe too, we're waiting for some Chinese data. We're going to get a bit of a data dump with the retail sales, fixed asset investment and industrial production. How vulnerable is your call on European equities to the lack of a significant recovery or sustainable growth in China?
So valuations always hint or are always interesting for investors that take a bit more medium-term approach and a less tactical approach as a side note. Now, when we talk about China and the Chinese data, China is contributing 28% to the world economy. So when China sneezes, the world economy catches a cold, and this is why we all focus on this morning's data. Coming back to the Eurozone is a very open economy with firms being highly integrated into value chains. So in that respect, as you already mentioned, the Eurozone economy is vulnerable to further trade protectionism, actually from two sides. First of all, it's caught somehow between the US and Chinese trade war and also Czech Cold War, but on the other hand, there's still the lingering risk of protectionist measures targeted directly at Europe. But from an economic standpoint, while the external side will continue to be soft and I expect exports to be sluggish, the domestic demand side looks much more rosy. So the economic growth in the Eurozone will come to rely and will continue to rely on domestic demand.